U.S. Treasury Secretary Steven Mnuchin says the U.S. and China held, quote, productive trade talks in Beijing, and they'll continue their talks in Washington next week as the two countries look to end a trade war. Joining us now from Washington is American Action Forum President Douglas Holtz-Eakin. Doug, it's great to have you on today. Let's start with your thoughts on the trade front. We've been hearing for weeks that these talks are productive, and yet the sticking point still seems to be enforcement as well as timing in the rollback of tariffs. What do you see as a comprehensive agreement that could really push the markets higher?
I think the markets are going to reward simply stopping the war. So the real question is, how can that happen? And I think the enforcement and the tariffs are tightly linked in the president's mind. He thinks of keeping the tariffs in place as the mechanism that forces the Chinese to comply with whatever agreement they've reached, and we don't know what that is. The Chinese obviously don't see it that way. I think the global trading community would like to see those tariffs go away as well. They've been a sticking point. So I'm not sure exactly how they get to the end of this particular negotiation. I think they've done the easy stuff, which is agree to close the bilateral deficit a little bit. But the hard thing is the enforcement and dropping the tariffs, because that's the part that I think the president himself is most committed to.
Hi, Doug. This is Tendai Kapiza with Lending Tree. I'm curious, if let's say we do get an agreement, how does the rubber hit the road with this trade agreement? Because we have an agreement right now on the table with Mexico and Canada, and it seems that is not yet a practical thing in the marketplace. So what happens once there's an agreement with China? What is the process where we actually have it be something that's affecting businesses and the economy?
Well, I think the USMCA is actually a cautionary tale. That's something that is far from a guarantee to get through Capitol Hill. Certainly, if you compare USMCA to NAFTA in the aggregate, it's pretty much of a wash. There's not a big step forward here for the U.S. It depends on what sector you're in. If you're in telecommunications or digital goods, it's a big step forward. Others, it's not. So I think the concern is that the president might try to force Congress's hand by withdrawing from NAFTA to force them to take USMCA. If you go to the China deal, it's not obvious what his leverage is to get the Democrats to sign on and give him a big win prior to the November election. So I don't think you get a formal agreement out of China. I think you get some high-level executive agreement about our conduct. He drops tariffs. China agrees not to sort of forced joint ventures and the like, and you don't actually get something that gets ratified by Congress.
Doug, let's bring the conversation back here home, because we've seen President Trump and congressional Democrats agree to pursue a $2 trillion infrastructure plan yesterday, and yet there's still questions about how they actually get the revenue to pay for that.
Yeah, I count me skeptical on seeing this actually turn into something that is live legislation the president signs. First of all, I think it's a mistake to put dollar figures out there. That's not actually how they should pursue this. It's better to just identify genuinely valuable infrastructure investments and then figure out how to finance them. The Achilles heel of U.S. federal infrastructure policy has always been project selection. We waste a lot of money in this.